up around 30%. The firm reported results this week with revenue coming in well above expectations, strong double-digit growth. Joining us is Mark Lipschultz. He's Blue Owl's co-founder and co-president. Mark, it's good to see you.
Thank you. Thank you so much for having me, Sarah.
So you've really been able to grow this direct lending business pretty organically and significantly during 2022. How does that work as the Fed is raising interest rates?
So, we've been very fortunate. We've been able to build a series of strategies at Blue Owl that have a common thread. The common thread is about capital preservation, safety, security during times of uncertainty with very strong current returns, current yields. And that applies to our triple net real estate business, our GP solutions business, and most directly to our direct lending business. And in direct lending, we're really providing capital solutions to companies, financing solutions to companies on a floating rate basis. So in this environment, the two attributes from an investor looking at our products that's appealing is it's about durability through times of uncertainty, and actually our returns go up when rates rise. So this has actually been an upward trajectory for returns in our direct lending Blue Owl business over the last couple of years.
So if the Fed is getting close to a pause here, let's say with terminal rate of 5% or so, how does that affect it?
So at the end of the day, we do floating rate, which means when rates go up, we rise with them. If and when rates come down, and inflation presumably correspondingly, then some of our yields will come down. But the beauty of the business and the power that we provide to someone's portfolios, you don't have to take a static view on that today. You can invest with our products and you will float up and down with those variances. Sitting here today and trying to call, are we at the end of the pause? Talk about retail sales, blowout numbers.
Very strong.
We've seen strong numbers this week. So maybe we are, maybe we aren't. The beauty, dare I say, for us, we don't have to know that, and investors with us don't have to know that in our products because they're going to get the floating rate one way or the other.
There's been such strong appetite for alternatives, private equity. We've seen that, but is there more now that there's more competition in the public markets with higher rates? Is that a headwind for alts?
It's been a really interesting evolution. I've been in the alternatives business since 1995. Wasn't called alternatives back then. And there's a really interesting dynamic in this arc. What's happened with private assets, and I think over the last 5 years as visible as any, is they become, of course, a much larger share of the market, but actually a much more stable and durable share. Think about post-pandemic. Think about 2022. Direct lenders remained very active providers of capital when the public markets disappeared. So if I think back to the 90s and we think about private alternatives, think about LBOs as they were called then, it was very opportunistic. The public market was steady and the private markets would kind of come and go. There's a bit of a reversal, and actually private markets, direct lenders, for example, kept the capital markets going in 2022 when the public markets retreated.
Right. So there's the defense on the private lending. You raised your dividend as expected. A lot of people watch your story as a dividend story. Some sell-side analysts say it can get up to $1 per share by 2026. Is that realistic?
That is our plan. We're looking to deliver $1 of dividends in 2025. We have a very unusual model because we don't have carry interest. We don't have performance fees in our model. Ours are about steady, predictable growth. The Blue Owl model is. It's about delivering fee-based income on permanent capital. Very important. 94% of our revenues, 94% come from permanent capital pools. So our trajectory is upward and very predictable.
Do you think that your stock market performance would have been better if you did not go public via very complex SPAC merger, double merger, just a traditional IPO? How does it impact the holders of your company? And do you think it's held you back?
Yeah, I think that it would have been better. Look, it was a necessary tool to accomplish the strategic end we wanted to accomplish, and it worked. We're able to bring together these GP solutions capabilities with our direct lending capabilities, now our triple net lease capabilities. So it was the right thing to do, and it worked. However, it means we had to spend more time educating more investors about our business because we didn't have that traditional IPO route. So I think, the silver lining, I think there's a lot of upside from here as people come to understand. Listening to our earnings this week, they'll start to see a real difference between Blue Owl. We delivered exactly what we talked about publicly in the spring, when all our peers, for reasons that are understandable, are not able to deliver what they thought in the spring because the world got more uncertain. Times of uncertainty, we still continue to perform.
One thing that was uncertain with some of your competitors, like a Blackstone or Starwood, is they put up these gates on some of their private REITs. Anything to be concerned about that something like that could happen with you?
So, listen, they're great firms doing a great job, and those are great products. We have very different products. Our products are about, in fact, we've been increasing our distributions. And so we actually are a very meaningful participant in the individual investor market. We really do believe in the democratization of access to the outperformance of alts. So we participate, but this continues to be a great area for us. We raised $2.2 billion in the private wealth channel, and we only had about $180 million in redemptions for the whole quarter. So different set of circumstances for us, but those are great products. I'm sure they'll do well.
Well, the stock is breaking out here, up more than 4%. Thank you very much, Mark Lipschultz.
Thanks so much.
Good to get an update from
Blue
Blue Owl. That's the co-founder.